Hey guys, welcome back to another video. And today we're going to be talking about a couple things in this video. First, I kind of wanted to go over the SP 500 and where I think it could potentially be headed. And then I'm probably going to talk about some other stocks later in this video. So, as I mentioned in my previous video a while back on the SP 500, I thought we would kind of see a W formation after kind of pivoting on this C wave low. And I thought we would kind of see a W formation and then a push up to this 161.8% extension of this W formation. We've kind of seen that up into this 3820 handle. And now I think possibly we could be coming into some short-term supply. Now there's a few things that could probably happen at this level. I think we'll actually probably continue higher here all the way up until that 261.8% extension. And in that case, this sits right at about 4190. The reason I think we continue up to that 261.8% extension is, well, we haven't really completed a 5-wave cycle up into this 161.8% extension. We're just kind of starting this third wave. Usually in Elliott wave theory, the third wave is going to be the largest of the 3 waves higher. And if you measure the distance on this first wave from this C wave low, that's about 40 handles. So for this third wave to kind of be complete, you'd have to see over a 40 handle move higher from this 3600 level, and we haven't really seen that. Another reason I think we kind of push up to that 261.8% extension without really seeing any kind of significant pullback here is that level's right in line with this 161.8% extension of this previous highs back in March to these lows set in March. Once we kind of V-bottomed and we broke out, the most likely place you're going to head to is that 161.8% extension. That also sits at about 4100. I've been kind of saying we'd see 4100 ever since back at about 2930 when we broke over that level, and I still think we see 4100 now. I don't think there's any real significant reason we see a short-term pullback, as I think we're kind of building out this third wave, and I think we kind of build out that third and fifth wave all the way up into that 261.8% extension. On a really short-term basis, over the next couple of days, we could see a pullback, maybe even all the way back to this trend line here before then continuing higher. This is the trend line of the top of this megaphone pattern we broke out from back in November. I think it could be logical to retest this area before then continuing higher up into that 261.8% extension. But overall, I don't really see any significant supply here besides maybe a 5% pullback at most. And quite honestly, I don't even think we see that. This whole rally has been fueled with negative bias, and that negative bias is still relevant in the market. So I do think the pain trade is higher, and we push past this 161.8% extension without really seeing any significant pullback here. Now, once we reach that 4100 level, I do think there's a massive amount of supply there, and that's where I would look to get short. But until then, I probably won't look to short too much here. If you think we do kind of see a 5% drawdown here, you could look for names to short against their recent highs for an overall market pullback here, as we've come into this 161.8% extension. But quite honestly, I think we kind of just push past this level and we continue to go higher. Another thing I wanted to talk about is this dark pool index. Now what this dark pool index does is it highlights the strength of basically institutional buying underneath the market. And really significant sell signals with this dark pool index would be anywhere below about 40%. We did see drops below that level back when we kind of built out that ABC wave, but ever since then these dark pools have actually been starting to buy the market, and there's no real significant indication of market downside here as well. In fact, it looks like the dark pools are going to continue to buy the market as they have been doing this whole rally. I would be cautious if we did see a significant drop in dark pool buying, but the dark pools sort of create a heavy demand floor beneath the market where the market really can't drop. Similar to back here when we saw these high dark pool prints back in March, this was a heavy indication that the market had bottomed and that we would kind of see a V-bottom and then a melt to that 161.8% extension of that V-bottom's range. So as far as the dark pools go, there's no real sign of a significant drop coming anytime soon. Now, one last thing about where I think the S&P 500 could potentially be headed is with this equity put-to-call ratio. And this put-to-call ratio has been on a decline for quite some time, actually about ever since March. And it's actually seen really historically low levels. Now this can be an indication that the expectation for a drop in the market is actually quite low, which I do agree with as a ton of retail traders have come into the market. A lot of them think the market's just going to keep going up and up forever. That's not really reality. But what I do think we see here is I think this put-to-call ratio continues to get depressed to extremely low levels as the S&P kind of pushes up into that 4100 level, where then we see a significant rise in this put-to-call ratio as maybe we see some downside risk past that point. This would really be the only supportive case for a significant drop at this 3820 level would be this put-to-call ratio. It's extremely low, and usually when the put-to-call ratio gets this low, it's usually an indication of a near market top. Again, I don't think we've come into that top. I think that top could sit somewhere at around 4100. So as far as right now goes, I would continue to expect this put-to-call ratio to stay relatively low and continue to create negative bias within the market, fueling this market rally. I just kind of wanted to throw this in here because I think this is a great indication of where market tops and bottoms are. As you see any significant rise, that's usually a market bottom, and when levels are extremely depressed, that's usually a market top. And right now we're sitting at very low levels on this put to call ratio. Now another stock I wanted to talk about in this video is Wkhs, or Wkhs. And I had mentioned this stock all the way back here at about 13. I thought you had a great trade against this level for a push to this 161.8% extension at 28. We kind of saw that, and then I thought you actually had a great short position against those recent highs there. And I actually had given a prediction on this stock that we would kind of see a three-wave cycle lower. Actually, with these previous yellow lines here was my prediction. Kind of seen that, and then now we've started to rally off that ABC wave low. The reason I'm mentioning this stock is because I think you might have a good trade against these recent wave 2 lows. If the stock does retrace closer to this level, you might be able to get a good entry here. So ever since it's kind of built out this ABC wave, which I had predicted a couple months ago, it started to build another 5-wave cycle higher. So it started this first wave higher up into 30, then retracing back down to about 20, and now it's kind of ready to make this third wave higher, probably up into the 138.2% extension of this ABC waves range. In this case, that's going to sit right at about 35, and that 161.8% extension is going to sit right at about 39. So a way you can kind of go around trading this would be to get an entry as close as possible to these wave 2 lows down here at about 1880. For instance, if this stock was to retrace maybe back to about 23, you might be able to get an entry against this 1880 level, risking about 4 points, and you'd look to target that 39 level. So you'd be risking about 4 points for 15 in this case. That's a decent risk-reward trade. I wouldn't look to take the trade here because you don't really have the best risk-reward, or really any place to put your risk against. You'd kind of have to wait for a retrace here before taking this trade. But I do think this is a great trade, and I do think we kind of see overall a 5-wave cycle up into that 161.8% extension here, sitting right at about 40 a share. Now another trade I wanted to talk about is AMD. AMD has kind of completed this 5-wave cycle higher after building out this ABC wave back in this W formation, and I think it's ready to kind of build out this ABC wave down. It's built out a head and shoulders pattern here, and I think you've got a decent short against its recent highs here, up at about 98. I think in this case you could short against 98. You're risking about 3.5 points, and you'd look to target 83.48, which is that 161.8% extension. So in this case, you're risking about 3.5 points for 11 points. You've got a pretty decent risk reward in this trade. You've got about a 1 to 3 risk reward in this trade. I would also look to trim half into that 138.2% extension, sitting right at about 85.50. Anyways, these are some trades that I just wanted to mention as potential trades you could go around taking right now. As I said, the S&P has come into a potential for some short-term supply here, so short positions like AMD could offer a good trade. Anyways, that's kind of my views on the market right now, and these trades in particular. If you enjoyed this video or it helped you out in some sort of way, make sure to subscribe and leave a like. And thank you so much for watching.